What's good? Welcome back to another episode of Where the Money At. We on episode 10 and we keeping it rocking and rolling. So if you like what we're doing over here, subscribe, comment, hit that like button because we're trying to grow this community here. So basically what we're going to talk about today is some things we should look out for as far as the current cryptocurrency market and the health of these projects. Then we're going to get into the plans that we need to make based off of what the Fed is going to do with the income rates and with the interest rates. And we need to have our plan ready for whatever move they make. Then we're finally going to talk about some real estate and how I currently feel about it. And then we could brainstorm on some ways we could possibly move forward and grow with this asset. So let's get right into it. Let's add this stream here. Um, let's look at the Bitcoin price action for the last 24 hours. In the last 24 hours, Bitcoin has not done much. We're currently sitting at 28,100 and it's went down 1.6%. Ethereum has went down 1.7%. So basically it's done nothing. I believe we're going to stay in this range between 26.5 and 30,000 for the next couple weeks. So to be honest with you, the price action should be the same, and we're going to stay in this range before we take another leg down towards 15,000 or another leg up towards 40,000. But what we need to talk about as far as the entirety of the cryptocurrency market is, have we seen enough projects die yet? And I know that may sound a little bit doom and gloom, but it comes with it when we start getting lower price action and these companies start dying out. We've seen banks die out. Silicon Valley. We've seen exchanges die out, FTX. So you know it's coming when some of these projects die out. The top 50 coins today will not be the same top 50 coins in 6 months. And with the rougher economic environment that I believe we're going into, a lot of these companies are going to have to die out. A lot of these companies got their funding and started when money was flowing and we were at the top of the price action in the last Bitcoin cycle and everybody was excited about it. Now we need to see how good these companies can build and how much runway they have and see if they can last and build during the bear market. So what is a DAO project? A DAO project is basically, as Coin Market Cap defines it, is digital assets of projects that have been abandoned, turned out to be scams, have low liquidity or insufficient trading funds, among other reasons. And this happens all the time. If you've been in crypto, you've been part of some type of rug pulls. NFTs do them all the time because it's very early in that space. It doesn't happen in cryptocurrency as much, but new coins pop up every day and disappear. So there's a million dead projects. There's like comment a coin that you've invested in before and is now a dead project. But we know that there's more regulatory scrutiny coming to the space. So we had, and why do I say more projects need to die? We need to be locked in and paying attention to the companies that are going to make it so we know possibly which ones to invest in going into the next economic cycle. None of this is financial advice, by the way, but a part of the cryptocurrency regulation that's coming in, Bittrex just shut down its U.S. operation side due to regulatory uncertainty. So there's uncertainty in the U.S. Chinese officials call for stronger global regulation of currency. So there's regulation discussions going on in China. So with all this confusion, it's time to get in and build your base before they decide exactly what they want to do with it. The current U.S. administration has already told you that they aren't in full support of crypto. They're looking into it. They want to regulate it, and they're trying to see what they want to do with it, but they are not in full support. And that's fine because they do give valid reasons on why they're not just jumping all in. So with that being said, this may be a time to get in and build your base in this asset before another administration comes in and gives it laws and regulations and a real platform to allow it to take off. You want to get in before that. So let's talk about the U.S. federal funds rate. This is what we keep hearing about when they say they're raising interest rates and they're raising yada, yada, yada. And before I get started, I have to give full credit. I got this idea from a technical analysis channel called Vision Pulse, and I'll link that video in the description. But as we can see, the Fed has been consistently raising rates past 2020. And if we look in the past, what happens? They raise rates. There's a time period where they pause and eventually they cut rates. They raise rates, we pause, and eventually they cut rates again. So if I'm using history, what happened the last two times we paused and then cut rates? It looks like we paused around 2018, 19, went flat for a while, then cut. So let's go to the what is this? The S&P 500 around 2018. So we went flat in 2019. So we cut interest rates in 2019. What happened? 2019, we cut interest rates in this year and we fell off the table. If we go back to the previous time around 2018, we were flat, and maybe 2017 we were flat. In 2018 we cut rates. So what happened in 2018 after we cut rates? We fell off the table, and then we really fell off later at the end of that year. So this is where, if you've watched any of my previous videos, this is where I get this theory of, I believe the Fed is going to raise interest rates, pause, then cut, which may present an opportunity if history doesn't always repeat itself, but it rhymes. So there may be a large fall off in stock prices, and with stock prices falling comes cryptocurrency prices falling, an opportunity to get in before the next large possible run up. And that's where I get that theory from. So if we come here and look at the FOMC meetings, they met on May 2nd and raised interest rates. Now we have to wait till June and July and September. They could raise one more, they could raise a couple more times. But from what we see, after they raise for so long and they get to whatever point they want to get to, eventually they'll go flat. And the market could take off when we go flat. I've mentioned that a couple times, which is why I built a base position, not financial advice. But I really plan on doing my damage after that large drop down, after we start to cut rates again. And that is my plan. That's the plan I'm going with. Do not take that plan and run with it, because it may not even work for me. You know what I'm saying? There's points in times where the Fed raises rates and goes straight into a cut. That is possible. It hasn't happened lately, but it's happened. And that would throw off my plan, and I would have to be agile and adjust towards that. So, that's enough of that. All the boring stuff. So let's talk about real estate really quickly. And I want you guys to comment how you feel about real estate. This is personally how I was feeling about it. Coming up, I'm coming into my 30s. So growing up, I felt like real estate was something that, while you're accumulating, all types of assets, real estate is one that you get in order to help you accumulate wealth. As of today, in 2023, I view real estate as something that people who already have wealth use to put money in and preserve their wealth. Just due to the high price barrier to get in, I think it's harder for people to use real estate to build their wealth. But I know it's possible. So I want to ask you, like, what is your plan? Do you want to get into real estate and buy and hold? Do you want to get into foreclosures, probate properties? I'm thinking like maybe, me being in my 30s, getting into my working years, I want to get a house to live in. Is that the best move for a existing home that needs no upgrades to move into? It can't be much of an asset if I'm living in it. So maybe that may not be the best move. Should I move into a fixer upper that needs work, and I get into it and I could possibly get a deal and put value into it? Could that work? The price of multifamilies, just moving into a duplex, living in one side and renting the other side out, the price of multifamilies has skyrocketed. As you can see, from the point of 2020, the median home price has just went ballistic and through the roof. And this chart is going straight up. This chart is going parabolic. And this chart is from 1963 to now. So it may, we saw in the SPY where it went down and provided some real opportunities. Maybe, since we're going flat here, maybe we tick down just a little bit. This has, between 07 and 09 was the largest decline in price that I can see. And I don't believe we're going to have another situation like 2007 as far as price decline. We may have another crash, but I don't believe prices will go down that far. So that's just what I want to put on the table and bring up. Like, I think we need to start having discussions about our plan of how we're going to use real estate to accumulate the wealth that we want to get. Because for me, it's about profiting every month. If I can afford a home and I get in one and I make 4,000 a month and it costs $3,000 a month to live in that home, that's not worth it. That's not worth it. I also want to be in a situation where if I'm renting it out, I'm in the positive. I don't want anything that has a negative yield to it. So we'll leave it at that. What I need you guys to do is to comment. I need you guys to subscribe for me because we're trying to grow this community and we're going to keep talking about an array of different topics to help us figure out where this money at. So I appreciate y'all for rocking with me and I'll holler at y'all.